What's good, YouTube? It's your boy Zay, and we're back with another video. So this week, we got some hot topics that we need to cover. It's a lot going on. We got the Suez Canal. We got President Biden, dropping his infrastructure plan on Wednesday, supposedly. And of course, it's the end of the quarter, so we should be expecting a lot of volatility. We're going to get into all of that. Of course, we're going to look at the technical levels for the week that we need to pay attention to. We'll even cover a special chart. I'm thinking Tesla. And then, of course, we're going to get into Elliott Waves. That's going to be the lesson of the week. We're going to get into Elliott Waves, what they are, what do they look like. So this is going to be a jam-packed action video episode. I appreciate all you guys and all the feedback from the first episode. So I'm going to try to tighten it up a little bit. But without further ado, I need you guys to press the like button as well as subscribe to my channel. So that way, whenever I do put out a new video, you are in the know. Now, without further ado, guys, let's get into those hot topics for the week. All right, family. So we're going to get into the hot topics of the week. As you already know, it is the end of the quarter, so we're going to see some volatility, you guys. So as this last week comes to a closure, we'll probably see funds and investment managers finish or wrap up their rebalancing of portfolios. And when you actually look at the setups, which we'll get into in a second when we hit the charts, there's some pretty decent setups, what actually leads me to believe that we'll see some buying going into Easter weekend. Now, there's a couple things that actually back that up. Number one, historically, April is a very, very strong month. Number two, as you can see, we have the good reports coming out on Friday. Now, the market is closed on Friday. And then the last time this happened was in 2015 when we came out with a jobs report and the market was actually closed. So you could see some people actually buying into Thursday in anticipation of this report. Not to mention the 2021 Stock Traders Almanac does say that Thursday, April 1st is supposed to be a bull day. So shout out to everybody that went and copped the 2021 Stock Traders Almanac. And if you don't have that, you can get it on Amazon. It's very easy to order. I highly, highly recommend that. Now, another thing to look out for this week is that Joe Biden will be talking about his infrastructure plan. Now, within that plan, he's probably going to get more details of what his plan of attack is, if he's going to try to split this into two bills, because there's some chatter about just fatigue from all the stimulus. I mean, we had a couple of stimulus get passed last year. We had the one 600 billion at the end of the year. Then we just got another 1.9 trillion. So, there is just a lot of cash being pumped into the economy at this point. And so therefore, we want to look to see what kind of details come out of that. And that's going to be Wednesday. So the day before, the market actually closes for the weekend, because as I said, the market's closed on Friday. Another thing that they're pointing out is that we could continue to see a push-pull as far as just market rotation through tech and these the reopening trade. Now, what I really want to just kind of comment or add on that is that I know this is a bit of a concern. However, when these analysts are talking about them high-flying growth stocks, they're not necessarily talking about stuff like Apple, Amazon, like the FANG, because those valuations are justified. These are companies that are producing $100 billion quarters. The companies that they're more so talking about are high flyers, companies like, and I hate to say it, but like Teladoc, like they're not profitable yet, and we're basing them on future valuations. Now, they did have the deal with Livongo and all that stuff, but that's just one of those companies that is trading well ahead of their earnings. And there's a lot of like cloud type stocks like that, that just, they went crazy during the pandemic. And now it's time for them to kind of come back to reality or grow into those valuations. So be very careful when they talk about high growth flying stocks versus like FANG, because there's needs to be a little bit of separation. And so I want you guys to understand, if you're investing in good quality companies where the valuations actually back them up, then this whole rotation thing will be over soon enough and you'll be fine. So that is the hot topics for the week, guys. Those are the kind of things that you want to pay attention to. This article can be found on CNBC if you want to dig a little bit further. Now, I do want to get into one bonus hot topic, which is this Suez Canal. Now you can see here that the officials hope that this massive container ship can be operational Saturday, today, while I'm actually filming it, but they don't know when it's actually going to float. Now, why is this a big deal? This is a big deal because the Suez Canal is actually home to 12% of the world's seaborne trade. That's a pretty big impact when we talk about on a global scale. Now, as you can see, you got this big old shipping container that's stuck in this canal, and there are boats on both sides or ships on both sides that need to get in or get out in order to move certain, cargo and goods and services. And so there, we actually could see an impact on the market and the global economy, depending on how long this canal is actually blocked. So this is another hot topic that you want to pay attention to. It could just be another short-term blip as far as how the market reacts to it, but it's just in the bigger scheme of things, something else that you want to keep your eyes on. So those are kind of the hot topics as we head into the week. And so what we're now going to do is we're going to transition into the technicals to figure out, okay, how does this translate into the technical levels that we need to be paying attention to? So with that, let's get into those charts, y'all. All right, guys, so we are now on the charts. We're going to look at the Nasdaq. Now, as we talked about last week, let's go ahead and just use our line graph just so we can kind of cut through. So what levels do we need to pay attention to? We talked about it last week that we kind of saw like the NASDAQ wanted to come down to the 12,975. And I just want to change it to candles because I want to point out we did actually get down to that 12,975. We actually breached it, went down a little bit further. But as you can see, we were met with instant rejection. The buyers came in and pushed the price back up, ultimately allowing us to finish above the 20-day weekly moving average, which you see is this line here. Great sign because that means we're still keeping our bullish momentum on the long run. Now, being that we did finish at 13,138, that's a good sign. So what do we need to pay attention for next week? So the first level that I'll be paying attention to as I change it back to our line graph and just get you guys situated is going to be this good old 13,325. I'd round down and just say 13,300 even. That's going to be a critical area of resistance that we need to get a close above, meaning we need to close above this so we can continue our bullish momentum and continue to make that push back to 14,000 plus. Now, if we cannot get past or close above this 13,300, the areas of support that ultimately we need to be paying attention to, of course, is going to be our 20-day moving average, which is around the 12,975 area, right? Basically, you can see how this has been a solid area of support. Our secondary area of support is going to be somewhere, I'll go ahead and mark us down at that 12,780, so 12,780, because that was the low for this past week. So I don't expect us to go any lower, but if we did close lower, that's not a good sign. That would signal more downside. So the levels to watch this week on the NASDAQ, as I said, is 12,950, which is our 20-day moving average. In the level of resistance is going to be 13,300 or so. We need to get above that. So look for us to kind of, continue that choppiness between these areas. And if we can get a clean close above this 13,300, the next area I will be looking for us to actually try would be 13,600. So I'll go ahead and add another resistance level right there. So I put it right at 13,637. So, those are going to be the areas that we want to pay attention to for the NASDAQ this week. So with that being said, let's get into our QQQs to follow that up. All right, so here we are on the QQQs. Again, as I said, the Qs did test down to our 308, and we actually held that area of support. So let's go ahead and put a support area here. So as you can see, reason why that was support is we did have a critical open on the week of March 8th here. And so we wanted to make sure that this 308 was a level of support. You can see that the Sellers were able to push us down, and then the buyers came in and we got rejection from any lower. And again, we closed above this 20-day weekly moving average, which has been an area of support for the QQQs as well as the Nasdaq in the past. So as you can see, on other times when it's come down, it's been respected and immediately bounced, and that's what we wanted to see here. And because we are in correction season, the fact that it's, you know, it's bouncing and it's hovering right on that 20-day, that's a good sign, because ultimately we want to get a nice break above that, and then we'll continue into our bullish momentum. So what to look for as far as the QQQs this week. So as I said, we're going to look to make sure that we have support, I'd say right here around that 313 level. So that's going to be our first area of support. If 313 breaks, we will want to see 308 hold again. As far as resistance, the levels that we need to break in order for us to continue our bullish momentum would be 320. If we can get a nice bullish close above 320, that would be great. And if we get above 320, the next level I'd be looking for us to actually start to break out is right above this 326 area. So we can get us a close above 326. That would initially signal us to that would allow us to kind of reach or head back to those all-time high levels, which is right around 337, 338 for the Qs. So in recap, what we'll be watching is 308, 313 for the support. And those will be good buying areas. Remember, this is not financial advice. This is informational and educational only. So yeah, just be careful. And then as far as resistance levels, we're looking at 320 to 325. So 320 will be the first level, 325 around our second level. So that is the Qs. Let's get into the S&P 500 real quick. So the S&P 500, that's the SPX. As we look at this right here, again, area of support that we'll be watching is going to be 38.54. If that cannot hold, again, we're really looking for our 20-day moving average on a weekly to hold up, which will put us right at 37.91, aka 3800. Now I will say this, I believe that the S&P is actually on its way to break through 4,000 and go to 4,000 plus. So as far as resistance levels that I'll be paying attention to, honestly, once we get through 39.90, 39.89 is what I say. We get a close above 39, basically 39.90. Close to that 4,000. Oh, I think we just blast through there, and we could go as high as 4,100 before ultimately, you know, coming back to retest that 4,000 level. So again, that'll be something to pay attention to on the SPX, is how do we fare this upcoming week. Again, I could possibly see us actually hitting this 39.90 and coming back down, and again trading within this zone of 39.90 to 38.50. So just be wary of that. Just, you know, with all of the events going on, you know, we could trade and we could be stuck between these zones. But I'm potentially looking for the breakout to 4,000 plus, or we'll come back down and possibly test this 38.54. So let's translate that into the SPY. So we're looking at the SPY here. So as you can see, as far as area of support for the SPY going into next week is going to be our 383 area. As you can see, if that area does not hold, our 20-day moving average puts us at 378. So we need to watch these for the downside here, guys. As for the upside, as far as level of resistance, again, our next level of resistance really is going to be at that 398. Which is the previous all-time high. And if we break 398, again, I think that takes us clear to 400 and beyond. We could climb as high as, say, 410, 415, depending on how high it goes. But then ultimately, it's going to come back down and retest that 400 or so. So that's what I'll be watching on the SPY. Just to get over and just to check on the US 10-year real quick. We talked about this. As you can see, we got a topper here. So it looks like the US 10-year Treasury could be looking to roll over a little bit. It's pretty high on the RSI as well when it comes to the weekly. So the level that I'll actually be paying attention to for the US bonds as we continue to get more buying going into rebalancing is I would love to see a close below 1.62, which would signal that we'd probably be looking to come test around that 1.53. Actually, I'll bump this up a little bit. I'd say probably 1.55 as low as somewhere between 1.47. I don't really think we'll get that low, but just something to watch for on the U.S. Treasury. And it seems to be like people aren't even paying attention, but again, really no trouble or anything to worry about unless we get to that 1.95 or higher is what I'm paying attention to when it comes to U.S. Treasury. As far as the VIX, wow, look at that. The VIX, we talked about the VIX and how you can see is right on that 200-day moving average. When we look at the weekly chart, we did close well below 20. We talked about that last week as well, that we are trying to signal that we're going back to a normal market. So a close below 20 for the first time since the pandemic started. This is a really big deal. A lot of that volatility is now coming out of the market, and we're seeing things kind of get back to normal, which is a good thing. So with that being said, what we'll be watching for coming into this upcoming week, I'm actually looking for the VIX to carry this momentum through the rest of the week and actually touch maybe 17. I'd love to see the VIX get as low as 17 and pretty much just close this gap that we talked about on the VIX. I would love to see that gap get closed. Now, here's the scary part, right? And not even really the scary part is if we do break this 200-day moving average and we do close or touch 17, that could set us up for some significant volatility, and we could see a bounce to where maybe we come retest, I'd say probably somewhere around 22, which is where we got rejected. So I would look for the VIX to kind of be stuck or trade within this range of 22 to 17. So let's just keep our eye on the VIX and see what actually happens as we get into next week. So it'd be good to pretty much update this and see where we get. And then just to wrap it up, guys, so let's take a look at Bitcoin. So at the time of this recording, Bitcoin is at $55,771. So as you can see, hard rejection. And where we're getting that actual rejection is right where we figured we'd find support, which is around that 50,000 level. Now, if Bitcoin can actually hold this coming into next week, I wouldn't be surprised if we get a bounce and we actually could see Bitcoin retest those all-time highs of 61,000 and maybe even break out to as high as 65K. So what will we be paying attention to when it comes to Bitcoin? Either we're going to be looking to get a close above 58K, which would signal that, hey, we can retest or go for that 61,000 and head to 65. If we don't, then we could actually look to, get some downside towards this 50K. And if 50K doesn't hold, the next area of support that we'll be paying attention to is this 44.8. And then from there, 44.8 doesn't hold, could get pretty nasty. And as you can see, our 20-day average on a weekly is sitting right at 36,347. So right around 36K will be that next area of support. So I'm not saying all of that price action is going to work itself out within this next week or so, but this is definitely something to watch in the coming weeks, and the levels we'll be paying attention to. So in the interim, the levels to pay attention to is this 58, which is serving as resistance. We got this 50K or 55.5K working as support. And so we want to see, do we get a bounce up or do we continue going down? That's what we'll be paying attention to in Bitcoin. And then just to wrap it up, before we get into the chart of the week, is Ethereum. So we are watching Ethereum. As we talked about it did look like Ethereum had more downside. It actually came down and touched right around 1540. So 1540, we hit there, and then we got a nice bounce. Buyers came in, rejected us going lower. So same thing with Ethereum. What I'll be paying attention to is if we can hold above, say, this this support area of, say, 1700, basically, what we could be looking to see is a bounce for us to start heading to 2200 within the next couple of weeks. As y'all know, I am actually a big believer in Ethereum. I think Ethereum is one of the superior cryptos out there, and that we could possibly even see a 5K to 10K Ethereum coin by the end of this year. So just something to pay attention to. of, hey, do we hold or do we close above the 17,000 or 1,700? And if so, does that set us up for our bounce to go to about 2,200? Again, the first level of resistance that we would probably hit is going to be somewhere around here, which is 1860. And then our second area of resistance we hit would be right around at 1945. And if we broke through there, then it pretty much all roads lead to 2,200 or so. And so that is the update for the week, guys. Now what we're going to do is we're going to get into the chart of the week, which is actually Tesla. All right, fam. So we are now on Tesla's chart. Taking a look at Tesla, right? Woo, Tesla getting that work, y'all. No lie. I think when we look at Tesla's chart, the thing that you can see most noticeably is this drop here. So from about February 8th, Tesla went from 870 all the way down to as low as what's that low? 540. So basically what we have here, and then we found some support right at that 592, 600. We got a nice push back up to 700. And then the last 2 weeks, Tesla has been taking a little bit of a beating. So what are we paying attention to? Obviously, Tesla did close under its weekly 20-day moving average, which is not a good sign. However, we do have support when you look at that 600, 590 area. So what I'll actually be paying attention to this week for Tesla is, hey, do we get a bounce from this area of 600 and do we get a bounce up to 700? Because that's where we'll see the first area of resistance. And if we can get through 700, we'll actually see another area of resistance around 720 or 719. If we can get a close above, say, 700 or 720 by the end of this week, that would allow, as we go into April and May, for Tesla really to start up a really, really nice bounce for it to at least push to 775 to kind of close this gap. And if we get beyond 775, it's definitely a test of those all-time highs, which will put us around 800 or 880 to $900. So this is a very, very critical week for Tesla holders. We need to see a bounce. And if I just, hit you guys with that line chart, you can actually you can see the structure that Tesla is setting up here. And as you can see, the last time Tesla was at this price, we got a nice bounce to 693, did a nice little pullback, and then it took off. So what we want to see is a similar setup or follow that similar trend that it did in the past, which is why ultimately for Tesla, what we would like to see, as I said, is a nice bounce up to here, or maybe even a 720. We get a small retest of 700, and then from there we get up to just to test that 775, and then we're headed into all-time highs as we head into earnings season. So this is what ultimately we would like to see. I am a Tesla contract holder, for full disclaimer, and this is what I kind of anticipate for Tesla as we head into April, May earnings season. Tesla has some big news that they're looking forward to releasing. You got the full self-driving, you got Tesla semis, and we all know Elon always keeps something up his sleeve. So that's what I'll be watching for, as I said, this upcoming week, as well as going into April. So really, we need Tesla to hold this 618, 600 level. And we really are looking for end of the week close above 700 or above this 693, 720 area, so we can get back above the weekly 20-day moving average. So that is the chart of the week. That is Tesla. I know a lot of people have been asking me for Tesla, so I figured I'd go ahead and show you Tesla's chart and what our expectations are as we go into next week and beyond. So with that said, now we have gotten to the good part of the video where we're actually going to talk about Elliott Waves. So go ahead, if you need to take a sip of water, take a break, that's fine by me. Now what we're going to do is get right into Elliott Waves. We're going to break down the lesson of the week. All right, family, we're now going to talk about Elliott Waves. Now, before we actually get into practical application, real quick, I just want to give you a highlight of what they are. Now, the Elliott Wave principle is something that was developed by a guy named Ralph Nelson Elliott, right? He was a professional accountant. And essentially what he did is he studied the market and he said, hey, I believe that the market works based on investor psychology, and there's a highs and lows, and that there's a repetitive trend or market cycle that follows an investor's psychology. And he put this book together, and it's actually called Nature's Laws, The Secret of Universe, and it came out in 1946, so you can definitely check that out. He also has another book called The Wave Principle, which came out in 1938, so pretty dope. But essentially what he says is that there's a set of what you call impulse waves and then corrective waves. And I'll show you those as we go through and walk through the example of how I actually spot and do the count. Another thing about Elliott waves is that when you talk about the impulsive waves, it's usually on a 5 count. So it's a 1, 2, 3, 4, 5, and then the correction is a ABC. So whenever you hear somebody talk about 5-3 or the 5-3 wave count, that type of thing, they're essentially talking about the Elliott waves. Now, what does that actually look like? Now, I do want to also add that Elliott waves can be actually charted on a number of different time frames, right? Because it's a repetitive trend. So you will actually see, like right now, prime example is I'm showing you this on a weekly chart, right? Now, if you go to a daily chart or hourly chart, you can also spot this same wave trend within a larger trend, right? So that's why it can be a little bit confusing as far as for traders, like when do you start? And it's always, it usually comes down to traders' discretion when we're talking about Elliott waves. So hey, look, I'm probably sure I get some comments or people saying, hey, I do it this way. That's cool. It's a bunch of ways to skin the cat. You know what I mean? So what my purpose here is to just get people comfortable with the actual concept and show them what it looks like and how it works. So if you do it a different way, feel free to drop a comment and talk about how you use Elliott waves or whatnot. And I love to, learn from y'all as well. So let's actually get into breaking down the structure of Elliott waves. So as we talked about, there's a wave pattern. It's a 1, 2, 3, 4, 5 impulsive waves, and then you have ABC correction waves. And you guys can Google that part. If you just go to Investopedia, it's a dope little like 2-second video on, or 3-minute video on that. But what I'm gonna do is I'm gonna actually show y'all the structure, right? So let's use our wonderful line graph chart right now. In order for you guys to really understand, I'm gonna switch between candles and the line graph. But what I want you guys to realize is that the way I like to do it personally is work my way backwards, right? I'm all about reverse engineering. So if I can reverse engineer, I can find out where the wave count actually started by saying, okay, let me get a correction and work my way backwards. So prime example, the Nasdaq, we are in correction. So this is a great way for you to practice Elliott waves and work your way back, right? So if we're looking at, say, this chart on a weekly basis, what we can, and again, trader's discretion, here's how I would do Elliott waves. Number one is that I'm going to look for that A, B, C part first. So whenever you're looking at Elliott waves, the correction typically goes something like this. And let me just pull up my tool. So this would be the top, right? So a correction is going to be, this would be your A, and then you get a bounce, which is usually called a dead cat bounce, which is your B. And then ultimately you get a C wave, which is a retest, right? And so this is your ABC structure. Now, if I change it to candles, you can see it a lot more clear. You had, and I actually fixed it. So you had your first A wave, which is your 3 weeks of down. You got a bounce, and then you got a retest, right? So I'm gonna actually clean that up. So you got your A wave, your B wave, and then your C wave, which is your retest. And ultimately, you can see how we kind of stayed flat right there. So that's a way you can say, okay, is the correction over? This is why, in my assumption, I feel like the correction in the Nasdaq is almost over because we've gotten our ABC correction. Now we just need to say, okay, do we go into an accumulation phase or do we quickly rebound? I think we kind of going a little bit to an accumulation phase, sort of rebound, but another topic next week, we'll cover that. All right, so now that we've identified our ABC waves, let me change it back to the line. Now that we've done that, now we can go back and talk about our impulsive waves. So that's going to be your basically 5 count. Now, how I would do it is, now that I know, and actually let me get back to my pointer. Now that I know this is the top, I'm going to count backwards. So this was my fifth wave, right? And then I had a small bounce here, or because we're working backwards. So this would be wave 5 and 4. Then this large run right here, where you really don't see too many corrections, this is essentially the start of your 3 right here. So this would be your, when you talking about impulsive waves, your third wave is always going to be the one that accounts for the like the biggest of the run. Like this is the one where you're going to see the most price appreciation, is how I should put it, right? Then what you'll see is before you get to your 3 wave, you typically have a dip. So this right here would have been our dip, right? So this would have been 2, and then our 1 would have started here. So let me just kind of like go back through that. So how it would have started without reverse engineering is you actually would have said, okay, we started here from, after we just had, this is the beauty. This was the September correction right here. This right here is the September correction. If I go back, you can see September correction. Now, ultimately, here's how we can kind of count it. So essentially we would have had correction. We came out, we started wave 1. So this would have been wave 1. And we would have got a retest, right? Wave 2, which is here. Then after that, we got our bounce and we started wave 3. So bounce into wave 3. And we got our little G check right here, which is 4, typically a shakeout before you get to the top. And then you have wave 5, which puts us at the top. Then ultimately, correction season. We corrected for about 3 weeks. We got our dead cat bounce, and then we retested. So this pattern, it just shows you like you've had your wave count. Now we're going to restart, right? And after every 5 count, typically it restarts, which is why I said, okay, are we going to look to go into accumulation phase, or is it going to be a quick rebound? But all in essence, Elliott Waves do is it gives you a guide or a gauge of, okay, where are we in the larger trend of things, especially when it comes to like long-term trends, especially for those who are day traders or long-term position traders. Because for me, that's why I like to look at the chart on the weekly time frame, is because I can see I basically can look at the larger trend and really understand where are we, and then I can kind of like drill down for more specifics of, okay, I know in the larger trend of things we're in wave 3, but hey, maybe if I get a pullback, that would be a good area for me to hop in, because I know that we're still in the larger trend of going up. Now ultimately, that's what happened. We had a lot of people who bought in during wave 3, when things were kind of hot and running hot, and some people even bought on wave 4 and 5, which is at the top. And so now that we have a correction, they're feeling it, right? But let's just say that, hey, this wave count starts over. Well, then if that's the case, the assumption could be, and I'll kind of add this gem in, excuse the ads, but I'll add this gem in as just, like a little extra, right? So if we just take the brunt of this wave here, and measure that, that gives us 23% in 78 days. So this was the info line tool that I used here. If I just do the same thing and replicate that same run from where we currently are now, and if I take 78 days, and I go to 23%, 78, we got 77 and 23%. Look where that will put the S&P, or no, I'm sorry, look where that will put the Nasdaq. That will put the Nasdaq approximately by June at 16,000. Now, if you watch the Come Upstairs and shout out to the big bro Mark, then you heard what Dan Ives' target was for the end of the year for the Nasdaq, 16,000. So this just kind of puts things into perspective. Now, I'm not saying that the Nasdaq is going to 16,000 by June. I just wanted to show you, like, hey, if we had a similar run or similar, impulse wave of a 3 count that we saw from basically, what was that, November to January, then you could expect, that same type of run. Now, I don't think it'll necessarily happen that way. What I'm actually thinking we'll see, and then I'm gonna kind of wrap this up, is that here would be my kind of prediction or guess, or not necessarily guess. Here's my prediction of what we see coming out of this correction. So if I go back to my line, because it's going to be a little bit easier if I put this together for y'all with the line, because you can just follow the path, right? So essentially what we'll get is we'll get a wave probably to about 13,500 or so. Then we'll probably get a nice little our wave count of 2 right here, probably the G check, just to make sure, hey, does this fit up? And then we all know that during the summer and spring and summer is when we have, you know, traditionally good months. And that sets up for our wave 3 count pretty much all the way through the summer, going into, say, August, somewhere around here. Let's just say we get up to about let's just say we get to about 15.5 halfway, right? So put us at halfway. Then we'll have like basically our fall correction, right? Our fall correction going into September, whatnot, September quad witching. Maybe we come back down to make sure all the these highs are good. So we check, say, somewhere around 14,300 or so, because that's where our all-time highs was back in the year. So we want to make sure that serves as support. And then from here, pretty much into the end of the year, we get a bounce, and then that puts us what Dan Ives' suggestion was, which is about 16,000. So now, of course, there's going to be more squigglies in there, like more squiggly lines and stuff, more cuts. But again, we're looking at the larger trend of things. And so ultimately, you know, that could be our projection of, you know, we get some more choppiness. Then ultimately we have a nice run during the summer, which will be our wave 3. We get our pullback in the fall. And then ultimately, once the fall is over, we get our run into the end of the year. Now, also, there'll probably be a small little, you know, dip when it comes to June or July, just because that's typically when we see another quad witching. But ultimately, that's how you can kind of use Elliott Waves to help you get a prediction, or just to let you see, like, hey, where are we in the bigger trend of things? So hopefully that was a good explanation. But yeah, so that was the lesson of the day, Elliott Waves. It's just a simple 5-3 wave count that you guys need to learn. I showed you how to actually draw it, what the impulse waves and correction waves look like, how you can actually use it to project out. So with that being said, we can go ahead and wrap this video up, guys, and get into the closing. All right, family. So there you have it. We've covered the hot topics for the week. We've looked at the technical levels that we need to be paying attention to, as well as the chart of the week. And we went through Elliott Waves, guys. So again, I appreciate you for sticking through this entire video. Again, don't forget to press the like button as well as the subscribe button to make sure whenever I drop a new video, you are in the know. Also, drop a comment about what you like, what you didn't like, so that way we can continue to improve this series. So I hope at the end of the day, you got enough information, a lot of good information to help you going into this trading week, as well as moving ahead. You know, that's what it's all about, sharing information and helping each other during this journey as we continue to build wealth. So, as I said, guys, I appreciate y'all for tuning in. Until next week, y'all know the phrase, stay blessed. Peace out.
Run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building. Who else but us?